Today we're going to talk a little bit about unified credit and why it might potentially matter to you and your family. In 2024, we have a new exclusion amount, which we'll show on screen in just a second, at a little over 13 million. And we also have a new annual gift tax exclusion number of 18,000 per eligible beneficiary. Now that might sound like a lot of gobbledygook, but let's talk a little bit about why that matters. And I have some graphics that I can bring on screen that'll help me explain a little bit about that and some of the planning strategies that are going to exist in both 2024 and 2025. It is presumed at this point, the way that the tax law is written, that we're effectively going to have a 2-year window to implement some of these strategies. So without further ado, let me pull a few things on screen. So we have a graphic that our graphic designer Caesar created for us, and I think it does a nice job of kind of outlining the unified credit. So for those that don't know, the unified credit is the amount that you're able to transfer at your time of death without taxation. I do find that it is commonly misunderstood and wanted to add a little bit of color commentary to that. So what you're going to notice is that back in the day, in this example, kind of in the late 70s, the amount that somebody could transfer is actually quite small in today's standards. 160,000, 225,000, and you're going to see in the early 80s that number slowly started ratcheting up to upwards of around 600,000, and it stayed that way for quite some time. So for example, let's say your estate was $1 million. The government would say, here's your unified credit, here's your coupon of the portion we're not going to tax you again on, and let's say it's 600,000 in this year. We're going to go ahead and whap you with a death tax of 40% on anything that is above that number. That's a good rough understanding of how that works. So in this particular example, 400,000 times 40%, we have around $160,000 tax bill at death. And your heirs, your trustee or executor, would be responsible within a 9-month period of coming up with that sum of money and effectively paying tax on your final tax return on what's called Form 706. So what's interesting is the government said, okay, well, why don't we do this? Why don't we allow you to give away some of your wealth, either in a irrevocable trust or just an outright gift to a beneficiary per year? And as long as you keep it within a reasonable amount that we determine, we're not going to have any issues with taxes on that, both death tax and then there's no what's called gift tax. So you're going to see back in the day in the late 1980s to early 1990 type time frame, we were allowed to transfer around $10,000 per year. So if you had 2 kids, you could give $20,000 all to one child, or you could do $10,000 each, or any combination thereof. That's going to come in play in a second. You're going to notice that it started ratcheting up a little by little in 1998, 1999, and 2000. The way it was explained to me is that every year our government would meet on this number and move it up by a measly $25,000. It's my belief that at a certain point in time, the government had better things to do than to ratchet this number up by 25,000. So you're going to notice in 2002, they said, enough with this, let's just go ahead and give it a healthy bump to a cool $1 million, and then we're not going to dink around with this for a while. So it stayed at that level for roughly 8 years. And that determination was made in the Economic Growth Tax Reconciliation Relief Act of 2001 and became effective in 2002. Okay. What you're going to notice is during the Obama administration that number went up dramatically. It is one where politicians, to oftentimes get their agenda placed, in his case, he really, really wanted something called Obamacare to pass, and it is one where he needed some Republican votes. So the political horse trade there was to get the last few votes for Obamacare to pass. It was somehow agreed upon by some politicians at some point that, hey, if you make this number $5 million and index it for inflation, that we're going to go ahead and vote for Obamacare. That was the trade. So we got a really healthy bump in 2011. And for folks like me that don't like death tax, I thought that was really great that that number went to $5 million. And especially that it was indexed for inflation, whereas a financial planner, we could at least plan on that target on a go-forward basis. President Obama, who was a very gifted speaker, did a nice speech on what he called the American Tax Relief Act, and that's where that went into effect. Fast forward to when President Trump was president. On December 15th of 2017, he had the TJCA, Tax Jobs Cut Act, is what I believe that stands for, from memory. And basically he said, in typical Trump fashion, I am twice as good as Obama, so therefore my number should be twice as much. However, he only did that during what he presumed to be his 8-year presidency. Here's where the planning strategy comes in. If the high 11 billion index for inflation, which is presently the 13,610,000, is in play, he has it revert back to the pre-Trump administration to the final Obama number of 5.49 million, and you're going to go ahead and see that it drops back down to that. So it is one where we have a scheduled decrease to plan for. So let's talk a little bit about the planning strategies. We obviously don't know the 2025 number, which is why it has a little triangle next to it, but we do know the 13 million. So in essence, right now, let's say that your estate included 3 simple things, and we're going to make it really easy. Let's say that you had a $2 million retirement account, a $3 million business, and let's say you had a $10 million inexpensive term insurance plan that was inside of your estate. If we have $10 million, if we have a $3 million business and a $2 million retirement account of some sort, those 3 numbers together in aggregate equal 15 million. So if that person died, there would absolutely in 2024 be death tax. So a planning strategy would be, what if we were to move the life insurance into a specially designed irrevocable trust called an ILIT? Effectively, as long as that term insurance that pays out 10 million if you die costs less than 18,000 per year, you are allowed to effectively move that over into a trust as a gift, and effectively that is now forever out of your estate. Whenever you make transfers of different things like life insurance or other structures, they have what's called a 3-year clawback. So effectively it's one where you can't die in that 3-year period and have it count. They would unwind that transaction as if you never did it. So there's really no downside to doing it per se, but it is one where procrastinators do not benefit from this strategy. It is one where you want to do it bigger, faster, stronger, and effectively move forward on it. So let's just say that you did that and you died in a much future year where presumably that number is somewhere in the vicinity of 5.5 million. Well, in that particular case, we now only have your $3 million business that probably might be worth 3.5 at that point, and we have the $2 million retirement account that presumably might be the same because you've been living on it, something along those lines. So those 2 numbers together conveniently equal 5.5 million, and effectively there would be no death tax because that cool 10 million that's off on the sidelines that we put inside of an irrevocable trust, those are not subject to death tax. That's the major advantage of doing those. So in summary, what we're really after here is this is a number that is very important, in my opinion, for anybody that has an estate over 5.5 million with death benefit included. That's a key determination. Might benefit from gift tax or further estate planning conversations. And it is of my belief that there's no downside of putting term insurance inside of an irrevocable trust. It's just a good planning strategy because, as you can see, over time, that exemption amount has changed dramatically, and very willy-nilly, it can change with not much notice. For example, with President Biden and Build Back Better, he was trying to make this number revert down to 3.5 million. Now, we all know that Build Back Better version 1 did not pass, so that change didn't happen. But what it does tell us is the government is hoping to lower this number in the future, and therefore, the clock is ticking on implementing some of these strategies. As always, if you ever have any questions about gift tax exclusion, estate tax exclusion, or any other financial planning topics, GWSA is here to help, and we welcome those conversations. We love to coordinate with your various tax professionals, legal professionals, insurance professionals, or anybody else that's on your financial team. And hopefully this provides you just kind of a very quick insight of what unified credit is, the new number for 2024, and found this a little bit helpful. Thanks so much for your time.